Peter Eliades with you. This is Thursday, March 26th, Stock Market Cycles update for that day, for this day. We're going to start out with the NDX because this is a chart we've been showing you saying where we need to go to invalidate the significantly lower projections way down here. So as you can see, those projections are being threatened right now by this big rally that we've seen in all the indexes, but in the NASDAQ 100 the last couple of days. In order to completely invalidate this projection, however, you need to get above both of these offset lines and stay above there for more than one day. If you got up here and started coming back down again, then you would have the same projection, although because it would now have crossed at some point at a slightly higher level, it will bring this projection, the upper part of the projection range, up slightly. So I just want you to know what we're looking at in terms of the NDX. And speaking of the NDX, let's take a look at some of the shorter term projections. Notice how close we came to meeting this projection today. It calls for a minimum upside close of 79.44.95. Today's close was 78.97.13 on a percentage basis, and as you can see visually, not that far away. The market's been so volatile now that when we hear some of these numbers and you say, well, gee, that's 50 points away. Yeah, 50 points. You've been traversing 50 points in an hour or two nowadays on most of these indicators and indexes. So it got very close. And in fact, the NDX is one of the few indexes that you can almost say that, this is close enough to call it sometimes a hit like that. And if you turn around from there, then you're not going to get, we'll look at the slightly longer offsets here. This is what, if we fully meet the projection tomorrow immediately, this black line here shows you what it would take you to. It would not give a higher projection if you meet just the lowest part of the projection going into it tomorrow. So we're in an important area now with the NDX because we show the possibility of fully meeting all projections to the upside tomorrow without generating further upside projections, okay? And of course, the other alternative here is that you turn down immediately because you did get really close to that projection today. Okay, now we're going to start looking at some of the other indexes. Okay, here's the S&P 500 closing price chart, and as you can see, we met this projection in spades. That's the one from the previous, the next shorter offset group, and so we met that fully today, surpassed it a little bit, and started reaching towards this next projection, which is 26.99.42 to 28.65.50. That would be a big retracement of this decline, folks, if we saw the upper side of that projection. But the lower side of the projection right here will show you in the next longer offset chart so you can see what that holds out in terms of possibilities. Look at this. So here's the projection, the rectangle we just showed you for the shorter offset than this one. And you can get up there. Here's tomorrow right here. You can get up there without crossing above both of these offset lines, the red and the green. In fact, you can get up there for 1, 2, 3 days almost, over the next 3 days, which would be Friday, Monday, Tuesday, and not confirm a higher projection. So something like this might happen too. Let's open another alternative. We could get a nice decline here, perhaps even a sharp one, and then start up again and get a projection based on the crossing of this red line that might match up closely with the one that we already have up here. When you have a projection like this, it doesn't mean you go there immediately, necessarily. You can come down for a day or two, and as long as you don't cross below the offset lines that would invalidate this projection, this rectangle, you can very easily come down here for a day or two, then rally back up, and see this kind of move, see this projection being met, and perhaps even generate, if it comes down to this area, the same area of a projection by crossing this red line. And if you do that, then let me show you how far away you are. If we look at the next longer offset, look at all the room you have in here. It might not look like that much room there, but let's spread it out a little bit and show you where we stand. I mean, you have all these days in here. 1, 2, 3, 4, 1 week, 1, 2, 3, 4, 2 weeks. For the next 2 weeks, you can rally all the way back into this area and not give this kind of projection, which would be to new highs. I don't think we're going to see that, folks. So take a look at where we are and the kind of possibilities there are unraveling now with these projections. They're getting very interesting. Let's look at the Dow Jones Industrial Average on a closing basis. Okay, here's the Dow. Now, we don't have to look at these shorter projections, but I just want to show you in sequence how they run and how this fabulous projection software can be looked at in sequence, starting for the very shortest one. This is basically the shortest projection we generally look at. And then you go to the next longer one, and you can see this one has been met. Then you go to the next longer one, and you see that this one has not been met. And it's calling for 23,495.66. That's a minimum upside projection, and this is on the Dow. So how can we go about meeting that? Well, we look at the next longer offset, and this is that box. So again, a couple of things can happen. You can go directly up there in the next day or two, which would take you into this area, and not necessarily cross above the furthest of the two offset lines to give a higher projection. On the other hand, you can come down for a day or two into this area in here, and then cross above this red line, maybe giving about the same projection as you have outstanding already. If you crossed above the red line around here somewhere, that would be up like 1, 2.5 squares, maybe almost 3 squares from here. So 1, 2.5, 3 take you into the same projection area. So it's like a little jigsaw puzzle, how you put these things together, how you work them out in terms of the projections, and where you is it scientific? There's a certain bit of science to it, absolutely. I mean, I don't have to show you how many times these things have been accurate in the last 6 months that I've been presenting them virtually every day here. You have to be impressed by them. Now, as to how you get to the projections, that's a different story. Do we get there immediately in the next day or two? You don't know that from what we're looking at here. We just know that we have this projection outstanding. We could come down first for a day or two and then go up to it. That would probably be more satisfactory, because if we do that, we might get just about the same projection from these offsets right here. These offsets, by the way, are 12.1 to 13.8. Those are the equivalent of 2.5 week offsets, which give you nominal 5-week projections. So that's what we're looking at with this. Let's take a look at the New York Composite. Let's look at all of them today, because this is important, what we're looking at here in terms of the overall market picture. Okay, so it's basically the same picture with all the major indexes averages now. Here's the New York Composite. It met this projection from the other day. Remember how close we came yesterday to already meeting it, but it got well above it today, generating this further upside projection. 10,994, let's call it 10,995, round it off, all the way up to 11,696. So that projection is outstanding. If we look at that projection on the next longer offset, that's in here. And so you can see we can get up there. If we go immediately up there in the next day or two, we can get up there and stay there for 1, 2, 3 days without getting above the further offset line and turn down from there. Okay? Now, the other alternative, once again, is you come down for a day or two and then cross above this red line, perhaps giving around the same projection as you already have. So I hope you've got a pretty good picture here of where we stand. There's one more chart I can show you. I don't know if you've heard the publicity, people talking about this is the greatest 3-day advance in the Dow since 1931. Well, I wouldn't be too excited about saying it's the greatest advance since 1931, because let me show you what that advance was in 1931, and you might not be as bullishly excited as a lot of the commentators that we heard. I'm going to show you that. Okay, here's a chart of the Dow Jones Industrial Average in 1931 and 32. This is the greatest 3-day advance in the Dow's history, going back to at least the 1920s. And it beat the last 3 days that we've seen now currently by about 1%. This was a huge advance. It was around, I think 21, 22%. Anyway, they were very close. But is this where you'd like to be in the overall market picture if you're bullish? Granted, you came down, went back up, came up, and you even went a little bit higher. But this is where you ended up over the next 9 months. This, my friends, is not a miniature decline. This is a decline of 61%, I believe, from here, from this great rally day. Granted, you did rally further, but you ended up with a further decline of 61%. And the same thing happened from here. This is in the top 5 of 3-day advances in market history. That ended up here. Now, in both cases, you went a little bit higher. So you can argue, and we already argued showing you that from the projections, that you could indeed, over the next week or two, go a little bit higher. Don't get excited by that necessarily, though, because we're going to be watching day by day with you to show you exactly what the projections are showing. But don't be surprised if you see something like this occur, where yes, you go higher over the next week or two, but look at the prospects after that. Incredible decline. And mind you, again, these red arrows represent 2 of the top 5 3-day advances in Dow history. So they happen after big declines. These were huge declines taking you into this time period. Let's go out on this a little bit so you can get the full picture. I mean, here's the high back in 29, even a little bit further to the left in the chart. Then you get this big decline. Then you get that great 3-day rally. You got a great 3-day rally here. But that was all on the way down to much lower prices. This doesn't look like that great a decline in perspective looking back, but as I told you, this is a 60% decline from this red arrow down to the bottom in July of 1932. So I wanted to make that clear and give you a little perspective on people touting the fact that the greatest 3-day rally since 1931. Things like that aren't significant until you put them into historical perspective. Thanks for watching. These are exciting times. We'll be here with you, at least for a little while longer. We have some exciting news to be giving you, hopefully within the next week or two, about the projection software and about what we're going to be doing in the future. As you know, we've been doing these updates completely free of charge over the past 6 months or so, and that might not last this much longer, or that much longer, I should say. But we're going to be with you for at least the next few weeks here, so you can find out exactly what the cycles are saying about the market's prospects. Thanks for watching. If you haven't subscribed yet, bottom right of the screen, subscribe. Click on the notification bell. You'll be notified of all the updates. Please give us some remarks down below. The more remarks we get, the better things look for the channel overall. And hopefully they're generous remarks, and if you want to be critical, but give us a reason why. Thanks a lot for watching. We'll talk to you tomorrow. Maybe not tomorrow. Tomorrow's the weekend, so we'll talk to you Friday, Saturday, or Sunday. If we don't talk to you tomorrow, have a great weekend. Stay away from other people.